Hi, in this lesson we are going to talk about strategies. In order to be successful in trading, you need to have a proven, back-tested strategy. In our academy, we back-tested a lot of strategies, and most powerful ones with the biggest percentage of winning we shared with our students. For example, we have ADV Crypto 99 simple strategy, ADV Crypto 12, ADV Crypto reversal, and we also have two swing strategies that we are using, ADV Crypto breakout and ADV Crypto pullback. For all the strategies that we use, we had a team of programmers who backtested not just to see if the strategies work, rather to see in what percentage they work. And we have some of them working in 72%, 69, 71, 69 and other. That means that if percentage of success is 72, out of 100 trades, 72% are winning. In this lesson, we are going to introduce you ADV Crypto 99, day trading and swing trading strategy. Rules for an uptrend. Buy when uptrend is established. We are waiting for a pullback and for candle to touch 99 EMA, exponential moving average. Once it touches, we are buying the breakout of the high of the last candle. Stop loss is the low of the last candle and profit is 1 to 2 risk to reward. For a downtrend, we short when downtrend is established. We are waiting for a pullback and for candle to touch the 99 EMA, exponential moving average. Once it touches, we are buying the breakdown of the low of the last candle. Stop loss is the high of the last candle. Profit is 1 to 2 risk to reward. This is how it looks in an example. Let's say that we have a price action right here. And then we have a breakout of some important level. We don't want to buy right away when we see the breakout. We are waiting for a pullback. Once the price comes back and the candle touch 99 EMA, it is getting our attention. We don't want to buy right away when we see the pullback. We are rather waiting for a confirmation that the price is recovering. First candle that breaks the high of the previous candle, we are buying, and we are put our stop immediately at the low of that candle. We take our profit once the price reach 1 to 2 risk to reward. In this example, we bought when the price was 10.20. We put our stop immediately at 10.10, which means that we are risking 10 cents. Once the price goes to 10.40, which is 2 times of our risk, we are taking profits. The same is with the downtrend, just vice versa. If we have a price action right here and we have a breakdown of some very important level, we are waiting for a pullback, and once it touches the 99 EMA, it's getting our attention. First candle that breaks down, we are shorting. We are putting our stop loss immediately at the high of that candle. We are taking our profits once the price reach 1 to 2 risk to reward. To go a little deeper, here is an example of Ethereum trading on a 4-hour chart. We had a breakout of the previous very important resistance level. The price went up and came down and touched 99 EMA. First candle that broke out, we were buying. We put our stop immediately at the low of that candle, and we could see that the price never touched the low. Once it reached our 1 to 2 risk to reward, we took profits. Again, sometime later, we have the similar opportunity. We had the breakout of the previous support level. Price went up and came back and touched 99 EMA. First candle that broke out, we bought, and we put our stop immediately at the low of that candle. Once it reached 1 to 2 risk to reward, we took our profits. Have in mind that small breaking out candles are always better opportunity because you are lowering your risk. I hope that you will find this strategy helpful. If you have any question about the strategy, please don't hesitate to write in the comments.